Hi, good morning. Good morning, Mr. Patil. I'm so sorry I'm a little late today. And I'm just gonna take a couple of minutes to set this up. Sorry about this. Uh, Business calls started happening very early on. So I took some time. I had to take some time to begin, essentially. Just one second. I'll begin. No, come on. What the fuck is happening? So LinkedIn isn't taking my phone camera. Just one second. Sorry about this. We're just getting started. Some technical difficulties here. Sorry about this. Should I just. No. One second, please. Bum 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 There's something wrong happening here. I'm not being able to use my phone camera for the LinkedIn thing. God damn it. What do? I should start again. One second, let me try again. Hi, good morning, Akshaya, Miss Akshaya. Hi, thank you so much. You usually join from LinkedIn, right? You usually join from LinkedIn, and today I'm watching you join from YouTube. That's nice. That's nice. Just one second. I'm trying to solve a particular issue with this this streaming thing. So okay, I think I won't be able to solve it today. So I should just go ahead with what we have, right? Audio, Nishant Siphon camera. Somehow the camera isn't working. Oh god damn it. Anyway, let's begin. Come on in. Come on in, Mr. President. So, yes, I was checking in LinkedIn but couldn't find your live. That's why I joined on YouTube. That's very sweet of you. Thank you. Sorry about that. I am going to be live on LinkedIn as well, of course. So today was a slightly Wrong day for LinkedIn. There's some technical difficulty, and I was already late. So two things led to this particular delay. Sorry about this. We are already at 8:11. Oh my God, we're very very late today. So I'm just gonna sort this out and quickly. So you can hear me, right? I'm sure you can hear me, and I'll be sure that everybody can hear me on LinkedIn as well. I won't wait for that. Got it. Now everybody's got that on uh, LinkedIn as well. Just checking. I was already late. Perfect. So I'm audible on YouTube. I'm audible on LinkedIn. And here we go. All right. Bum 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 bum. Hello everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Things just got a whole lot better, ladies and gentlemen. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we go, we've got to follow a tradition, right? We've got to follow a sacred, sweet tradition. The tradition of the simultaneous sip. We'll all sip something together. It's supposed to be very lucky. And all you need for the simultaneous sip is a cup or mug or glass or tank, a chalice or stein, a canteen jug or flask or a vessel of any kind. Pour it with your favorite liquid. Today I'm having coffee, cold. And let's go! Oh my God. Beautiful. Beautiful. This is so nice. Let's do it again. Sublime. You know what the simultaneous sip says, right? You know what the simultaneous sip says, don't you? It says that you're not alone. It says that we are in this together. And that's such a nice thing to say. With that out of the way, let's begin. So, RIL is repackaging its FMCG business. So viewers of Thinker's Frequency would remember that Reliance Brands essentially is taking it's hiving off the subsidiary, taking it into a different unit. Why? Why do companies demerge? You know, why do companies demerge? The companies demerge for a lot of reasons, and most likely it's essentially some financial independence. So when I say financial independence, it doesn't mean that companies essentially are looking at moving away from the merged entity, or they'll have more say as far as their money is considered. Yeah, that's true. But when I say financial independence, it's more focused on fundraising independence. Because right now, the Reliance Brands business is a part of Reliance retail business, right? It's a part of that retail unit, and that sort of limits its ability to raise money, right? Because the multiples are different, there's a huge group and so on and so forth. So right now it's looking at demerging the entity, invest a lot in its capex, and then grow as an independent sort of geo kind of a way. So RIL has geo. So geo is a very different unit, right? So that's what Reliance Brands is looking at right now. Direct subsidiary of RIL. Reliance Industries is embarking on restructuring exercise that aim to group all its fast mover consumer goods brands, currently parts of its retail ventures, into a new company. So the retail company has a lot of companies with the brands, right? The products are currently with Reliance Retail, Reliance Retail Limited, Reliance Consumer Products, these three companies. So what it's going to do is it's going to start a new company called New Reliance Consumer Products, and that's going to have all the consumer brands. And then they're going to be looking at essentially, a capex of 10,000 crores or something of that sort. Yeah, 9 to 10,000 crore. Viewers of Thinkers Frequency would remember, right? We discussed that. So the consumer business 11,500 crore of revenue, out of which uh, general trade, that is like kirana stores and stuff, they made 60% sales. And it's the Reliance is saying that it's the fastest growing consumer brand in the country, FMCG player in the country. So they're trying to be like Patanjali, or let's say like Unilever, Nestle, P&G, and so on and so forth. So they are taking it head on. Bad news for HUL stock. HUL stock has already been taking a lot of beating. It's gonna be worse. So another huge conglomerate looking at the FMCG play. Bad news. To raise funds. You're right, Mr. Patil. Mr. Shami, good morning. So nice of you. Moving on. Quad statement condemns terrorist attack in Pahalgam. So some action happening as far as the diplomatic front is considered, but mostly a nothing burger, right? Mostly a nothing burger. When you look at India and Pakistan, what happened is this attack happened, everything happened. Then Pakistan got money from US. Then Pakistan got money from Russia, $1 billion. Then Pakistan got money from Japan, some 700-800 million or something. Then Pakistan got money from Asian Development Bank, some $800 million, and so on and so forth, right? So it doesn't matter what a few companies say as far as condemnation is considered. Kadi Ninda is not a business strategy, is not a strategic strategy either. Anyway, moving on, startups aim for over 18,000 crore in Dalal Street Dhamaka. Well, that shouldn't be a surprise to anybody, because if you remember, a lot of startups are going IPO, and with these great IPO moves by these startups, Dalal Street is actually looking at something. Now, 18,000 crores is a huge figure. Physics Wala is going IPO, then Misho is going IPO, and so on and so forth. Then there are some small IPOs like Urban Company. Soon you'll hear about Oyo going IPO, and so on and so forth. So a lot of IPOs, and there's a recent reading of the situation, right? That they got to provide exits to their investors, and those exits need to come quick. And also, because Indian stock market is so green right now, it's such a green field. It's the best market in the world, essentially. If you don't consider Hong Kong, but yeah, it's a growing market. It's huge. The financial sentiment is positive, and so on and so forth. So good news. If this particular thing happens, if this continues without any problem, Oyo's problems will get solved instantly. So viewers of Thinkers Frequency would know that Oyo is a total dumpster fire of a product, right? It's a total absolute dumpster fire company. Now Oyo wanted to IPO. It raised a lot of money over the years, and then the story is that in 2019 Oyo did a stock buyback to boost its valuation. So what it did was it bought its investor shares by itself. So Ritesh Agrawal, founder of Oyo, took a loan guaranteed by SoftBank, and with that loan of $2.2 billion, or 1.5 to $2.2 billion, he bought back the existing investors like Peak XV and so on and so forth, Lightspeed and so on. And they did at a $10 billion valuation. The sole motive of that transaction was to boost Oyo's valuation, right? It didn't make any sense, because before that Oyo had raised money at 6 billion or something. So it was an inter-party transaction, and there were two angles to it. So one part was Oyo taking loan guaranteed by SoftBank, Ritesh Agrawal taking loan guaranteed by SoftBank to buy its shares back, and then also personally taking loan to do that. So there were two entities to it. One was Oyo using an RV Holdings unit to buy its shares back guaranteed by SoftBank, and then Ritesh Agrawal personally taking loan of $300 million to buy its shares back, and all it wanted to do was boost Oyo's valuation to $10 billion. Right after that valuation boost, Oyo got Oyo tried to IPO at a $12 billion valuation in 2020 or something, 2020-21, right? Well, that didn't go anywhere. That didn't go as planned. Then it tried to again IPO at something like a $9 to $6 billion valuation, $9 billion valuation. That didn't go anywhere either. Then the third attempt was $6 billion. That didn't go anywhere either. Then the company was in dire straits because it doesn't make money. Now it started making a bit of money, but it has a lot of debt overhang, right? It took some 600 million debt to actually buy US motel chains, because the whole technology disruption angle was a fugazi lie. So what they did was they actually ended up buying a US motel chain, and they are now running it. So that was also a leverage play. So a lot of debt started piling up, and the company didn't make money. Then it came to from $12 billion first attempt to 9 billion to 6 billion. Then it came in such a bad space that the company actually raised money from family offices of India at a valuation of $2.5 billion. So from the company which bought itself shares back, basically SoftBank guaranteeing that transaction, which raised the company's value to 10 billion, when SoftBank itself was a shareholder. So SoftBank guaranteed the loan which Ritesh Agrawal and Oyo took to boost its valuation to 10 billion, while also being the largest shareholder. That was story number one. Then they tried to dump it to real estate retail investors for $12 billion, then $9 billion, then $6 billion, and then when they started running out of money, absolutely, it came down to $2.5 billion, where they essentially took that money from as a lifeline, right? As a lifeline, 35 million or something were raised by Indian family offices, and then they started again with their IPO plans. Now, this particular IPO plan was shelved by SoftBank, saying that your earnings are not good enough. So you've got to improve your earnings and then try again. That meeting is going to happen in August or something, right? After this, so right now the situation is that if Oyo fails to IPO, okay, that loan that it took in 2019, it's reaching a payment time, that loan will be breached and the covenants will be invoked. And once that happens, two things are going to happen. Ritesh Agrawal will get ousted from Oyo, because SoftBank will be taking over the shares when he can't pay back the loan, right? So SoftBank will be forced to assume the debt, being the guarantor of it, and pushing Ritesh Agrawal aside. And then the debt overhang of the company, because right now the company makes like 700 crores, and PAT, and also unaudited reports. So these are cooked financial engineering driven numbers. They're not real. They're most likely to be wrong. Okay. Now, what happens then is that number one, Ritesh Agrawal fails to pay loan. SoftBank, being the guarantor, assumes the loan, pushes Ritesh Agrawal, converts its debt into equity for itself, and then it has to sell a lot of units, because the debt needs to be paid back at the company level. So one debt is on the personal level, guaranteed by SoftBank. Then the second debt is on the company level, and the company doesn't make enough money to balance all these debts. So that's Oyo. But they are also going to, if this market sentiment continues right now, they might just be able to IPO. And if they are able to IPO, they'll be able to pay their previous loan and some part of this loan, and then it's gonna be a dumpster fire for the retail investors, but the company and Ritesh Agrawal might just get saved. So that's the situation. Let's see what happens, right? Who knows what happens? Nobody knows what happens. Oyo has been a very, very lucky company, and also a very unethical company. They've been lucky because they've been able to raise money like crazy, and they've been extremely unethical because they've been very, very bad to their hotel partners. When COVID came, COVID brought a big opportunity to them. So they used to run an inventory-led business, and then they had all these hotel partners, and they called force majeure and cancelled all their contracts, and didn't pay any of them. And they have been extremely unethical with their acquisition of Zorooms. Zorooms was a competitor company of Oyo, and Oyo agreed to acquire them, then took their data. The deal was supposed to be Zorooms getting 7% stake in Oyo, and then they showrooms got shut down, all the boards got on, off, everything got up, and then they refused to pay money to showrooms. Stock exchange, the share swap didn't happen. So basically, they shut down showrooms, took all their data, everything happened, and then they didn't do their part of the deal. So Oyo has been perhaps the worst company, one of the worst, if not worst. Like Ola could be there, right there, and then comes Oyo. But if the good market sentiment of this particular stock, D Street, the Lal Street stock market sentiment continues, Oyo could yet again prove to be uh, Destiny's Child. How's that for a story, guys? Renewable energy, Actus buys Blue Pine stake. A lot of renewable energy deals happening, of course. Companies may be valued at 1.4 billion, would be PE's third big green exit in India. So if you remember, Edelweiss also exited from a green venture, right? They had a solar thing, and then they exited even before its capacity was utilized. It was at zero point 0.8 megawatts, and then it could go up to 2 megawatts, but they just sold it early. Apparently, another exit has happened in this particular state. So what is happening with the green energy market? I mean, why are such private equity players looking at exiting the green energy deals? Do they know something we don't? You've got to think about it, right? You've got to think about it. Speaking of exits, Nykaa's early investor actually had a $150 million stake sale. So he's exiting Nykaa bit by bit. There's somebody called Mr. Harinder Pal Singh Bagga. He has 5% of Nykaa and he's selling it off bit by bit. So 2% of it is getting into a block deal, which is worth $150 million. So really good day for Baggaji. That's nice. That's nice. Happy for Baggaji, right? Are you happy for Baggaji? I'm definitely happy for Baggaji. Harinder Pal Baggaji making $150 million from his early investments in Nykaa. Good day. Good day. Anyway. So India and US are going through a free trade agreement, right? It's very complicated. The negotiations are very, very complicated. So that complicated negotiation is finding its way, and India has asked US to do a self-certification of GM free farm outputs, right? Food imports. So GM is genetically modified. Genetically modified crops are different from regular crops, right? And they are supposed to be unhealthy, and they're not. The science again is very, very muddled on this. Obviously, the growers of GM crops like Dow and so on and so forth, they'll never say that there are health risks to GM modified crops or genetically modified crops, but there could be. So India wanted to avoid it altogether, but US said no, you cannot do that. So now what India has done is they're asking for self certification. So it'll come with a certificate saying that this is genetically modified and this is not. So that's very important, I guess. It is actually. It is. Moving on. Cafe 3. Everyone is not on the same table as Maruti. So viewers of Thinkers Frequency would know about how the small car sales slump is happening, right? We talked about a lot, and how small cars aren't selling. What's selling are SUVs and so on and so forth. But small cars, which are the mainstay of Indian car market, they are not selling. So now a particular regulation is being fought on as far as these car companies are considered. Okay. So what is the regulation? Let me tell you. It's slightly complicated, but bear with me. So there's something called CAFE regulation. CAFE. Okay. So what is CAFE regulation? CAFE regulation is basically the emission regulation. Okay. So emission regulation, what CAFE means is that a car size, like corporate average fuel economy. Okay, that's the regulation. What it means is that they calculate emission target fleet wide. Okay, whatever the car company's fleet is, they look at the CO2 emission target, and they calculate it in grams of CO2 per kilometer. Okay, so CO2 per kilometer, CO2 in grams per kilometer. Okay, so CAFE regulations, third regulation, CAFE 3, what it does, it manages a corporate emission target. Okay, so this particular regulation applies uh, on the company's fleet, entire fleet, and they are supposed to maintain, let's say, 113 uh, grams of CO2 per kilometer, right? So what happens is, uh, Maruti says that this is not fair. This is not fair. Why? Because this essentially penalizes the small cars. Now, how does this penalize small cars, you ask, right? How does this penalize small cars? Because when you are applying this particular thing per fleet, right? So small cars also need to meet regulatory demands and so on and so forth, and they need to install whatever they need to install, right? And big cars are doing that anyway, but big cars have a lot of uh, leeway as far as pricing are considered, right? So small cars, despite being more efficient in a way, they have slightly higher CO2 per weight, right? Because that's a car. And now, since it's applied per fleet, what it's doing, it's averaging out small cars and big cars emissions. And then who loses? The small car loses, because small cars have an an extra regulatory overhang on them despite being lighter, right? So what Maruti says is that CAFE should be applied on differentiated sectors in a different way. Don't club small cars into this particular blanket regulation, because if you do that, you're not being able to sell. We are not being able to sell. Okay, so what Maruti wants it, that split CAFE 3 into two parts, one for small IC cars, one for everything else, right? So this would create like a separate, relaxed compliance regulatory path for small cars, because it's very bad. Small car situation is very bad. So somebody was saying, I wrote a post about this car scenario, and what somebody said was, but still Wagon and Wagon R and Tata Punch are the best selling cars in India. Now I said, that's such a bad reading of situation. How do you read data so bad? I mean, how can you read data in such a bad way? That somebody is saying that small cars are not selling, and you say Tata Punch and Wagon R are still the best selling cars. How does that mean? What does that mean? So data is that sales of small cars have fallen 35% per year at a compounded rate between 2016 to 2024. So 35% per year. You realize what that means? Like 35%. So 100 cars, now you're selling 65 cars. Then 65 cars, you're selling, let's say 35% of 60, I guess it should be 18, 20 cars, right? So 45 cars. Then 45 cars, you're spending less than 12. So 33 cars. 33 cars, you're selling 21 cars. So from 600 cars, you're coming to 21 cars in 5 years. That's how bad small car sales is. And that particular person was reading it as, still, this particular thing, Wagon R and Tata Punch are the highest selling cars. How bad can somebody's data reading be? Anyway, Mr. Patil says, little confused. If it's per emission per kilogram, not emission per kg of car, isn't it this way? How does it hurt? You are extremely right. You are extremely right. So this confusion is legitimate. If you're saying, if it's per emission per kilogram, kilometer, right? Not per emission per kg of car, how does it hurt? It should be beneficial to the car companies, the small car companies. That's what you mean, right? That because they have small cars, so they will be able to manage, right? Because the average emission per fleet will come down for Maruti because it sells most number of cars, small cars. However, the problem is, since small cars are not selling, Maruti doesn't have that average benefit anymore, right? So if you look at cafe and it's looking at average emission per fleet, and small cars which were bringing that average down suddenly don't sell at all, what you see is the average going up for Maruti. And once that happens, it's no. So what you need to be doing, Maruti says, is remove this particular thing from this entire regulation, because there's BS6, BS6 Bharat Safety 6, right? BS4, BS5, BS6. A lot of compliance and regulatory overhang is hanging on these small cars. Once you take them away, and then judge the mid vehicle and the top vehicle segment in a different way, you're gonna some price easing is going to happen to these cars, because they'll have to follow less regulations and they'll be able to bring it down. Are you being able to understand, Mr. Patil? Maruti used to sell a lot of small cars, which used to bring their average per emission down. But now those small cars are not selling anymore. So Maruti doesn't have any edge as far as per emission, let's say, number is considered. So they have the same regulatory overhang, and then they don't have that market share in that particular segment. Everything gets screwed from Maruti, right? And small cars are also not selling, because small cars, while being in this, need to implement a lot of, let's say, exhaust things and so on and so forth. So Maruti wants to exit this, and this is taken care of, and now this particular thing starts selling. Thanks for clarifying. I'm glad. These conversations make everything better, because without conversations, this stuff is so heavy, as you say, the mental workout, that it's not easy to understand without asking questions, right? So I have to read these things like 3, 4 times, 5 times to understand, because this is not easy to understand, right? Cafe and so on and so forth. Anyway, so something important to revise: sales of vehicles priced 5 to 10 lakhs, 10 to 15 lakhs, and 15 to 20 lakhs have increased 4%, 20%, and 29%, while sales of the small cars have gone 35% down year on year for the last 10 years. So the car industry is basically, this is a serious struggle. This is some serious struggle. Speaking of struggles, Nissan has reshuffled India leadership. Nissan is really in dire straits. I don't know what happens to Nissan. Just yesterday, viewers of Thinkers Frequency would remember, we talked about how Nissan actually, Renault had to write off its stake value in Nissan, $11 billion write-off through its 2 different entities. Renault is the French company. They are partners with Nissan. Nissan tried to merge with Honda. That didn't happen. Nissan's India sales are down. China is a tough market. Everything is screwed for Nissan, right? What happens to Nissan? We will see. Anyway, for consumer vehicles, commercial vehicles, table has another look. Tata Motors, Mahindra urge government to exempt So look at this. Cafe 3. Maruti wants Cafe 3 to be treated differently because of what I told you. Then Mahindra and Tata want Cafe 3 treated differently for the commercial vehicles, because commercial vehicles are their foray, right? So they said commercial vehicles makers emphasize that about 80% of small commercial vehicles are driver operators reliant on vehicle for livelihood. They say that if commercial vehicles are also in the ambit of cafe, their compliance costs will rise, the price will rise, and that will hurt the driver operators that are reliant on their livelihood. So everybody tries to sell their own agenda. Obviously, it's the job of the government to figure out which agenda it wants to save, and that is always the case. That's why, once again, what do I always say at Thinkers Frequency, right? Businesses think that they're independent. Businesses think that they run by themselves, but all business outcomes are products or the result of political will. So that said, let's move on. uh, India needs to be careful after the US Vietnam deal. So, viewers of Thinkers Frequency would know about the US Vietnam deal, right? You know, we've talked about it, we've discussed very deeply about the US Vietnam deal. What did we talk about? You remember? You remember? Can you say it? Oh, yeah, I heard you. So, US Vietnam, Vietnam was being used by China as a second front for its own products. So, China used to send its products to Vietnam and then basically repackage them and send to US. Repackage a slight value additions. And then Vietnam started becoming, people thought that, oh, Vietnam is growing as a manufacturing hub, man. So much of manufacturing exports are happening through Vietnam. But all that was BS, right? Because Vietnam was essentially a second front of the Chinese manufacturing might. Now that happened. So Team Trump said, China, you're getting tariffed. And then they looked at the Vietnam story and then they said, you're getting tariffed as well, 46%. So all of these two players started getting tariffed. So India needs to be careful after the US Vietnam deal, says the report. So, you know, uh, so transshipment tariffs could hurt the country because India has a favorable tariff position right now with with America. America will have lower tariffs with India. However, if this is being utilized by Chinese companies and a lot of transshipments start happening from India, then India will also get tariffed, and that will be very, very bad news, right? So that's that. Delhi pushes for social security packs in all FTAs. Sure. Niti Aayog said to unveil plan for elderly care. So, viewers of Thinkers Frequency would know that India's fertility rate has gone down from 2.1 for the first time. It's come down to 1.9. What that means is that we will be having 2.1 is that space where the population gets replenished. Okay, but when it comes down to less than 2, that is each parent couple has 2 kids. When it comes down to that, you have the population begins to shrink. Now obviously India's population wouldn't begin to shrink all of a sudden because there's something called a macro buffer, because there are a lot of kids underway, right? So that will keep happening, but suddenly you'll see in 2050 or 2060, that is when India's population will peak at 1.7 billion and then it will drop off the cliff, just like Japan, just like everybody else, right? So that means whenever your new population doesn't come, it increases increases the average age of your population. That means that people in your country become older on average. When that happens, what you ought to be doing is making sure that you have elder care as a priority item in your list, right? So that's what Niti Aayog is doing. Let's see what happens there. A lot of planning, a lot of nitis in the Aayog. Anyway, rush hour cab rides may cost twice the base charge. That's okay. State level inflation data for items likely to renew CPI series. So consumer price index that measures inflation. They're going to look at state level inflation data for items. So that's important. This government has been really pushing on more granular data measuring. As we all know, we've been discussing. At present, state-wise inflation data available at subgroup level, right? Rural-urban breakdown at the national scale plan. Now, consumer services also to be included. Retail inflation, this and that. And this particular data is going to get a certain tweak. So viewers of Thinkers Frequency would know about this, right? We've talked a lot about this. Anyway, I could talk about it to the new viewers if they write it on comments. Prada and Maharashtra body plans to talk on Kolhapuri stance. So again, viewers of Thinkers Frequency would know. Prada essentially stole the Kolhapuri design at a Milan fashion fest, and they didn't even give credit to the Kolhapuri artisans and so on and so forth, and they just chose to brush it aside, right? But that led to a lot of social media backlash, and then Prada said that we are going to work with the Kolhapuri artisans. But you know who came out with that message? It wasn't Prada's uh, business unit. Prada's CSR head came out with the statement. Now the question was, why is Prada's CSR head talking about this situation? This is an IP theft situation. Ideally, Prada's business unit should be talking about, when you steal somebody's IP, when I steal somebody's IP, do I talk about giving them a donation? No. It's a business decision, right? So business people should be getting involved. But for optics, Prada sent it CSR, and now virtual meetings are happening between senior leaders from Prada and Maharashtra government and associations about the Kolhapuri designs, right? Speaking of things that sometimes, they're just for optics. Information Broadcast Ministry is looking at rejig of norms for TV rating agencies. So they're saying they're scrapping the restrictions which basically don't allow TV channel guys to be, uh, shareholding board restrictions on shareholding, board composition, and cross holdings to boot industry participation. So this TV ratings guy, there was a huge controversy where Mr. Arnab Goswami, and the BARC guys had some sort of colluded to give favorable ratings to Republic. Now that led to a lot of restrictions on the particular scene. So people started looking at it very seriously. Apparently, now they sort of looking at changing that a bit. The Information Ministry is overhauling television rating agency norms by proposing to remove restrictions on board members' ties to media businesses and scrapping cross-holding limits, paving way for broader industry participation. So now, the people on the board of BARC could be directly related to media companies or channels, right? But what is the key insight here? What is the key insight here? Why is this happening? At Thinkers Frequency, we just don't read the news, right? We think about what's happening in real. So what do you think is happening? TV ratings are getting decline, seeing a solid decline, right? TV ratings are seeing a lot of decline. TV is seeing a lot of decline, as we've discussed so deeply. What happens when TV ratings and TV decline, and then you have all the restrictions on the TV rating, guys? It stifles the industry, right? So now with this relaxation of norms, what you're gonna see is better TV ratings, which is gonna be good for the perception of TV in general. And when it's good for the TV perception in general, it's good for the industry. So it's a way to fight the problems that the TV industry is facing, right? That's interesting. But do you think TV can fight back now? I don't think so. Right now we have 5 people on YouTube and 5 people on LinkedIn. 6 people on LinkedIn. That's like, you don't have TV. Anyway, key strength ratio signals bulls in the mood to run. You know what that key strength ratio is of the bulls? That's called ADR. That's basically advanced decline ratio. Advanced decline is that number of stocks that advanced, and decline is number of stocks that declined. So that ADR ratio, which is a key ratio, is going up, which means stocks are advancing, which means it's great news for the stock market. Also the VIX index, which is the volatility indicator, that's also low. So Indian stock markets could be looking at good days, says this particular report. Moving on. Gold may come down to earth in a world more at peace with itself. Analysts expect yellow metal prices to give up record highs, though geopolitics may keep them elevated for now. So who do you remember? Viewers of Thinkers Frequency would remember, right? Remember this beautiful thing that we talked about ahead of curve. So Mr. Tushar Tiwari said it's easy to say things in hindsight, right? And that's fine. But we didn't say these things on hindsight. We discussed about how gold prices might just be looking at some relaxation now that world is coming at peace. So Iran Israel conflict is off. Israel Gaza on conflict might just be off. US has stopped sending missiles to Ukraine in a bid to probably ease Russia. That means if Russia Ukraine war also stops, then world will be looking like a much better place geopolitically. And if that happens, gold could lose its value, right? Because gold is a hedge against all the instability of the world. That doesn't mean all the instability goes away if the wars go down. There's still the US debt situation, there's still a lot of problems, there's still China. But, you know, we talked about this. We were ahead of the curve. Now analysts have written a report on this, that gold prices could come down. So always ahead of the curve, people. Always ahead of the curve. Anyway, moving on. India is now the third largest IPO hub, by the way, after US and China, of course. Mhm. Trust doesn't run deep in wealth transfers. So there's a family ownership situation, right? The family patriarchs, they create a trust, and then trust leads to the wealth transfer. Now, central bank questions the transfer of ownership of a finance company to trusts, which are used to preserve wealth. So this is how the ultra rich do it, right? They form trusts in their name, and that trust actually manages the wealth. But that particular thing is being looked at by the central bank. If an NBFC holds a stake in a listed entity, the ownership transfer requires SEBI nod under the takeover code. So why is central bank looking at the question of transfer of ownership of, you know, finance company to trusts? You know, it needs the money. It needs the money and accountability. Anyway, lending growth stays in slow lane despite June rate cuts. So we talked about how rate cuts take some time to actually materialize, right? Let's say you got a rate cut, but that rate cut doesn't just get implemented by banks ASAP, right? Reserve Bank said that we are reducing lending rates. Banks say, okay, we'll have to reduce lending rate, but there's a latency. So right now, lending growth is in a slow lane despite June rate cuts. But is this headline actually news? It's just latency. A few days you're gonna say that loans are starting to look up, right? This is just filling of the news. Anyway, moving on. IEA throws weight behind India's digital energy stack. So IEA is International Energy Agency. So India, there's the two things happening right now. One is AI. Okay, AI is happening right now, and AI is taking a lot of energy, as we all know. And second thing is happening is a lot of action is happening on the energy front, right? With AI, there's a serious energy rise, use of energy, serious energy requirement, let's say, which leads to cost rise. But at the same time, there's a lot of growth as far as energy production is considered. The battery ecosystem, the solar ecosystem, the hydel and nuclear essentially. So there's a lot of action happening in both of the ends. So what these people are saying is that just to manage this AI transition, we don't want energy things to be going off the flip. So green transition needs to be taken for. But you know what's a very ahead of the curve situation? What happens is AI is gonna rise. It's gonna use a lot of energy. To match that energy usage rise, a lot of renewable energy or nuclear power plants and so on and so forth are gonna go up. But then AI is going to find out a way to use less energy. The chips are going to find out a way to use less energy. But then we'll have a lot of surplus energy here, which will lead to sudden deflation as far as energy costs are considered. How do you see that happening? Does that sound interesting to you? That's fascinating, right? That's just amazing that that's going to happen. I've done some math and you can look at it. VC funding inched up in H1, first half of the year, to 4.9 billion via 410 startup deals. A lot of it is late stage, growth stage stuff, Misho, Grow, and so on and so forth. A billion. But 1 billion out of these 4.9 billion has gone to early stage startups. None of that has fallen upon me, but hope is a very good thing, right? Hope is a very good thing. Maybe the best of all. So here's to hoping. Anyway, moving on. AI frenzy roars back after a lull as big tech spends, increase. By the way, what do people think about the job situation now? Microsoft also fired like 6% of its people, 4% of its people. So they essentially fired 9,000 people across verticals, right? They already had fired some 6,000, 8,000 people before. So people said, but AI is gonna introduce jobs. So say, hey, Microsoft fired people. Don't worry, AI will create new jobs. Hey, banking companies are firing people. Don't worry, AI is gonna create new jobs. Hey, IT, $280 billion IT companies are not being able to hire people. Don't worry, AI is gonna create jobs. Hey, these particular Amazon just hired like 1 million robots instead of hiring people. Don't worry, AI is gonna create new jobs. You see the pattern? It's a very good pattern, right? That should say something. That should be very, very clear to everybody. Anyway, Intel's new CEO explores big shift in its chip manufacturing business. So Intel used to be the pioneer in chip manufacturing. If you remember, Intel is a legendary company, and if you want to read a business book, right? If you want to read a business teaching book, like a book which teaches business, there are two books written by Andy Grove, sir, rest in peace. He was not the founder, but the CEO of Intel for the longest time. He worked with the founders, and he wrote the two best business books ever written. They are High Output Management and Only the Paranoid Will Survive. So he taught the world on how this technology business needs to be managed, needs to be shaped, and so on. Visionary books, extraordinary book. Nothing comes close to High Output Management and Only the Paranoid Will Survive. Great books, great books. The eye-opening books, so smart that you will be like, sir, thank you, sir, thank you. But as soon as he died, as soon as he passed away from Intel, just he gave reins. None of the Intel guys perhaps read those books, because Intel just fell off the face of the planet. It didn't take on the smartphone chip business because that was too small, and then it got big, Snapdragon, and everybody just took that market. And then it also couldn't take over the GPU kind of business. It got stuck with the PC business. But that also got replaced because Apple started making its own chips, right? The M1 chip. So now Intel is just screwed, but now they're trying to turn it around. So a lot of complications. So whenever you talk about companies like Intel, there's a lot of tech involved, but I'll just try to do that. So since taking over, CEO Lip Bhutan has moved fast to cut costs and find a new part to revive ailing US chip maker. Okay. By June, he started voicing that a manufacturing process that the prior CEO heavily bet on, known as 18A, is to be written off. So what happens is when a company is going through tough time, what the first CEO does is remove everything that the previous CEO did. So this is what Mr. What was his name? Lip Bhutan has done. He says that 18A is losing its appeal to new customers, and to put aside external sales of 18A and its variants, which have cost Intel billions to develop, the company would have to take a write-off. Okay, And now they are basically Intel. It said lead customers. That's that. Yeah. Intel aims to ramp up production of its Panther Lake laptop chips later in 2025, which it calls the most advanced chips ever created in United States. But who cares about laptop chips, man? Does anybody care about laptop chips? Of course. I mean, that's a rhetorical statement. People do care about laptop chips and they should. But isn't shouldn't Intel be thinking about creating a lot about the GPU play, because laptops are basically declining and it's an older technology and so on and so forth. But these things are very, very complicated. Anyway, Intel has lost its ground. By the way, Intel was looking at getting acquired. Not Intel looking at getting acquired, but people were looking at acquiring Intel. And that would have been an end of an era. So let's see how Intel shapes up now that everything is on. Moving on. Tesla's second quarter sales fall 13% on whatever, right? And Tesla's shipments in China rose a little, but EV market, the sales of Tesla's electric cars fell sharply in the last 3 months as boycotts over. So Mr. Musk really lost his house on the whole political thing, right? So he bet his cars, he bet his government contracts. If he would have lost the election, he would have instantly lost all the Starlink government play, right? He lost his businesses, he had a lot of personal reputation harm, he lost a lot of relationships, and then he also lost a lot of money, you know. But that's what heroism looks like, right? That's what heroism is all about. All for what? All for making sure that America doesn't go bankrupt. This is like a Howard Roark level story, right? This is like Atlas Shrugged, but much better. Fountainhead, but much better. Now people started, when I wrote something like this, people started calling me, you're an Elon fanboy, and you're a brainless person, and so on and so forth. And I'm like, what are you talking about, man? How else should a person display grandeur or greatness? Like, how? This person actually had everything to gain by being like, let's say, Mark Zuckerberg or Jeff Bezos or everybody else, right? Bill Gates, by being in the good books of Democrats, right? By not buying Twitter, because Democrats were winning and they would have won if he didn't step in, right? So he had nothing to lose by being like Mark Zuckerberg, let's say. And what Mark Zuckerberg and Bezos and everybody did after Trump won, they started siding with Trump. So he could have done that either, but he put his life on the line and took a lot of big risks. All for what, if this cannot be admired, I don't know what can be admired. So I don't know. I'm not sure. Maybe I'm missing something. But I feel if this cannot be admired, I don't know what can be admired. Anyway, moving on. Tesla, despite all these problems, Mr. Musk says that this is going to pick up. And in 2026, it's going to come up with two things that are going to change how the world works. They're going to change how the world works. They are basically iPhone. Just 22 years later. iPhone came in 2004, right? So iPhone had the greatest interest for a product ever in the human history. Now that's gonna get beaten by something called Optimus, which is the humanoid robot which can help you play piano and stuff. Everything it can do everything, right? So the humanoid robot called Optimus is gonna get launched next year, and also the robo-taxi. The self-driving robo-taxi, that's going to get launched next year. So you're looking at something really, really interesting as far as that particular thing is considered. And Iran has suspended its nuclear cooperation with IAEA. That's basically a negotiation chip. They are doing a Trump on Trump. So they're saying that we don't want to cooperate with IAEA, but we could, if you could, do something. So let's see how that situation evolves. US halts some missiles to Ukraine. I told you. There's a lot of political action. Paramount. So, people who don't follow US politics, there was an interview with Kamala Harris of Paramount. It's called 60 Minutes. CNN is 60 Minutes is a very big show. So they have a long form interview. It has a lot of prestige, right? 60 Minutes. So what happened with 60 Minutes in Kamala Harris was that they asked a question, then she gave like absolutely dumb answers, almost unbelievable answers, right? And what they did was they edited those answers and made them look more coherent. So that was Team Trump said that this is election interference. She's talking like a retard, and you are basically making it sound more coherent, right? So this is election interference. We are suing you for $10 billion. Now, Paramount has basically settled that course. They're gonna pay $16 million to Donald Trump's future library. So Donald Trump said that we're gonna make a great library in the White House, and I'm gonna pay for it, right? But then he won this lawsuit, and now Paramount is gonna pay for it. So somebody knows how to make a deal, man. Anyway, uh, J. Thomas Powell, the US Fed chief, has said that he expects the inflation to rise up in the next quarter. So inflation, US inflation is at 2%. It's doing really well. A lot of economic action is favorable for US. Job numbers are okay. Not the best ever, but okay. Payroll have declined a bit in June, but that's cyclical. Inflation is down. Energy costs are down. The trade tariffs didn't do any harm. Wall Street is up. It's going to be highest ever. So everything is good as far as the US economy, better. But Thomas Powell, the Fed chief, says that he expects the inflation to rise in the coming quarter. To which Mr. Trump has said, and I quote, he's a moron. Can you imagine this? Like the president of the United States calling the Fed chief a moron, an idiot, and so on and so forth. But that's how the world works nowadays. And with that, ladies and gentlemen, we come to the end of the 39th episode of Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis. Right before we punch in, it's 9-8. We've got to punch in. I am sorry for today's delay and the technical difficulties and the problems with my LinkedIn video finally. I'm really sorry. I apologize for the delay. I don't mean to cause these delay intentionally. I try my best to start at 8. I will start at 8 tomorrow. I've promised myself that I'll start at .8 tomorrow. Sorry about this. But I wish you have a beautiful day personally and professionally. I'll see you tomorrow at 8. Bye-bye.